Hello! Let us talk about options. Let us talk about options because I think it is time to stop thinking that you can actually predict the stock market. If we did, someone would have done it already and would have made a lot of money and we will all be better for it. So it is very difficult to predict the stock market. I think you should look at a different approach. And a different approach is that you need to look at hedging your tail risk. You want to manage your tail risk. And by doing that, it means that if you're going to be buying options, as soon as you decide to buy an option, it's probably too late because someone has thought about it. If you had a good idea to buy an option, that means that someone has already done it and they already take an action against it, and therefore it is not worth it. But what you need to do is you need to buy the option, long-dated put option for the future, out of the money options. What does it mean? It simply means that we're gonna use SPY, right, which is an ETF for the S&P 500. And if the S&P 500 drops, you're gonna make lots of money. So let's take a look at the SPY 355 put. That means that right now the SPY is in the 400, and because the market is doing great, and obviously if the market were to drop from the 400 to the 350, which is probably like a 20% drop or so, then your option is going to take on value. Now you're just playing the spread, right? So why is it great? Let me show you. The strategy we're going to be using is a long put. So you're basically bearish. You're one-way bearish. The good news is all you could lose is the money that you've invested. Let's say we buy the put at 345 and it's going to cost you $14.50. This thing trades in increments of 100, so you're going to invest $1,400. The SPY right now is at 436. Remember, the SPY is an ETF that tracks the S&P 500. I like this ETF because it trades heavily. For example, today, the market didn't do so well. Today is June 28th. The option call is at 345. The put is at 345. And the SPY trades at 436. The market went down a little bit. And guess what? That option went up 8% in one day. You're going to ask me, Wall Street me, how much money can I make out of this? Well, if you're right, and this option expires in 2025, in 2 years from now, and eventually, if it gets to that level, as you could see right there, the max profit is $33,000. Right? And the max loss is $1,450, which is the amount of money that you put. Now, obviously, for you to make money, the market would have to drop from 436 all the way down to 345, because it's basically 20% a drop, which is quite interesting.